Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of major releases of data from China and the US. First up, China recorded its fewest deaths in 58 years in 2019, with them down to 14.7 million and lower by 580,000 than the previous year, according to official data. Their population has just nudged 1.4 billion people, a rise of just 0.3% in 2019. And China has also reported that its economy grew 6.1% in 2019, ending the year with fourth quarter growth slightly lower at 6%, which was the same expansion as the third quarter. A slew of other December data was released at the same time, showing industrial production was up at the rate of 6.9% in December. In contrast, coal and oil production hardly rose at all, with electricity generation up just 3.5%. Many see this electricity growth as better reflection of actual economic activity. Retail sales were up 8% in December compared with the same month in 2018. Fast economic growth with no population growth will mean China is making quick gains in per capita income levels. And while the percentage growth gains may be slowing, in absolute gains are holding. Balancing the general positive Chinese data, however, has been generally weaker American announcements. Housing starts in the US took off in December, however, up 40% from the same month a year ago, which admittedly was unusually weak. But this may be a short-lived boost. Building permits for residential construction are starting to tail off from recent rises. American industrial production, however, wasn't so flash, coming in a full 1% lower in December 2019 than December 2018. There are many sectors with large declines, and without gains from IT and especially defence spending, their manufacturing sector would have been in a crisis situation. Job openings are shrinking too, and actually shrinking fast. They fell more than 7% in November from October, and that's down 11% in a year. Despite that, consumer sentiment remained virtually unchanged in early January, differing by just 0.2 of an index point from December. On Friday, the Atlanta Fed's GDP Now calculation showed economic growth shrinking to just 1.8% for the fourth quarter of 2018, a fast retreat. Today we can reveal that a similar tracking by the New York Fed has it even lower at 1.2%. One of the most interesting data comparisons is between real dollar GDP growth between China and the US. Based on official data released by each country, the American annual rise for 2019 was $388 billion, a remarkable 32% less than the $569 billion rise in 2018. That compares with real dollar rise for China in 2019, which is almost exactly the same level as 2018, at over $800 billion in each of the past 2 years. History will record that the tariff wars hit the Americans much more than the Chinese. And the Australian bushfire news is seriously undermining their tourism industry. An internal survey conducted among 850 members of the country's peak export tourism body showed that 70% of them were seeing a lot of cancellation from their big key markets, America, Britain and China. The US Treasury 10-year yield is exactly where we left it this time last week at 1.83%. Gold is now at $1,557 an ounce, and almost exactly the same level also as a week ago. US oil prices have also little changed, now at $58.50 a barrel, and the Brent benchmark is just on $64.50 a barrel. And the Kiwi dollar is now at 66.1 US cents, and broadly similar to this time last week. On the cross rates, we're at 96.1 Australian cents, and against the euro, we're at 59.6 euro cents. That puts the trade-weighted index at 71.4 on almost exactly the same level as this time last week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.